Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. So here's the latest this morning. The Federal Reserve hitting pause on rate cuts for the first time since July, pointing to a steadying labour market and improving economy. Claudia Sahm of New Century Advisors writing, there are reasons to be cautiously optimistic about the labour market. Reduced rates, fiscal support and solid consumer spending. Claudia joins us now for more. Claudia, it was the least anticipated Fed meeting in quite a while. In that regard, Chairman Powell did not disappoint. It was an absolute snoozer. Claudia, they seem to have this confidence in the outlook, a better outlook. How much weight should they put on recent data?
Right. Well, I think there was cautious optimism, right? There was a path forward where there's stabilization in the labor market that had been what had motivated the cuts before, concerns about the labor market. So there are some signs, didn't want to overplay it, but some signs. And Powell did sketch out a path for inflation to start turning back down. But there wasn't full conviction. Right. There wasn't, enough conviction in that outlook to actually see cuts. They're still going to want to wait and see the data. But Powell is painting the picture of further progress on inflation, further potential cuts in rates, just not yet.
Claudia, there was an element of that meme where there's someone sitting in a room saying everything is fine and there's burning all around them. This question of all the questions that he wouldn't answer going forward. I mean, can a Fed give forward guidance if there isn't a sense of who is going to be the next Fed chair and what some of the response are to some of these pretty significant questions that were asked about Fed independence, about the dollar, about a lot of other issues that were, I have no comment, I've got nothing for you for that.
Right. So in terms of the questions about, the investigation from the Department of Justice, the Supreme Court hearing on Lisa Cook, those are questions the Fed will be answering. So I think we should remember the press conference is really a window into the 2 days of deliberations about the monetary policy decision. He really needed to keep it to the economics because that's what they talked about for 2 days. Soon, Powell will be going to Congress for his semi-annual Humphrey Hawkins hearings, and that is absolutely the appropriate place to be answering these questions about politics. Powell even gave a hint to it in very Fed speak where he said, Congress is the window to democratic accountability for the Fed. That's where the Fed goes and has to answer those tough questions. So we're going to hear more on that. It's just trying to get, the timing right and the forum right. Yesterday was really for him to speak for the committee on these deliberations. And I think he did a good job on that. But, the politics are there and they're going to have to address this more fully.
There was another issue, another aspect of this press conference, and frankly, the decision more importantly, and that is one of the dissents. There were two dissents. One of them was Chris Waller, the Fed governor who is in contention to be the next Fed chair. Did you see this as a more political type of dissent or one that actually did come with consistency in terms of some of the rationale in previous decisions?
So I expect that we'll hear from Governor Waller for his thinking on his dissent, but it does fit a pattern. Waller was early to sound alarms about the labor market. He may be late to saying all's clear or signs are clear. I think it would be very consistent for him to still have concerns about, how much stabilization really is there in the labor market and concerns on that front. And also this piece about the inflation outlook. I mean, Waller is a forecaster to the core. He may have more conviction that those tariffs, we've seen the tariff rates that are there. We're going to have a textbook case of them rolling off. And he feels like it's worth going ahead and pulling some more restriction out of the economy. So I think there's a clear economic case that is consistent with not just Waller of the past year when he's been in potential running for Fed chair, but really Waller over his whole career. So I would really be hesitant to jump to the politics in this moment.
This is consistent, but to the same time, he is in the running to be a Fed chair, and we immediately saw his chances spike up because of that. Do you think, because he did dissent, that actually his chances are in fact better today than they were 24 hours ago?
I have no insights on who will be the next Fed chair. I mean, really, I don't. I mean, the market, prediction market response, that makes a lot of sense. And yes, he's pushing for cuts, but, this has been a really complicated process. The president clearly has, struggled to kind of come up with the person that he wants to see in that Fed chair position. I think, big picture, we should step back. Yesterday, it was a 10-2 vote in terms of pausing. The Fed chair is not the swing vote on the committee, right? Whoever goes into that position, there would have been a pause yesterday. So I think, I understand the speculation and maybe it did help Waller's odds yesterday, but we want a Fed that's focused on the economic conditions and making its decisions, and pulling the politics into it any more than is absolutely necessary. It's a really risky path for us to go down.
Stay with us. More Bloomberg surveillance coming up after this. Meta, Microsoft reaffirming commitments to record AI spending. Wall Street rewarding one tech giant, punishing the other. Angelo Zino of CFRA has a buy rating on Meta and a strong buy on Microsoft. Angelo joins us right now for more. Angelo, a lot of spending, two very, very different looking price moves in the pre-market. What explains the difference between Meta and Microsoft?
Yeah, John. So I would say, first off, we're not surprised by the higher than expected spending from these companies. I think most anticipated that going into the print here. I'd say Meta's spending definitely even more than we anticipated. But that being said, at this point in time, you're looking at a guidance of essentially 30% top line growth here for Q1, and that really is what explains it, right? This is a case where it seems like Wall Street is willing to bid your stock higher if you're showing the top line growth, and it's really phenomenal in terms of the type of growth you are seeing at Meta at this point in time. It really kind of demonstrates the fact that, hey, listen, maybe all these investments that Zuckerberg has made here over the last year is starting to pay off. I think Zuckerberg, in many respects, is treating his company like a startup, pumping a ton of money into it. You're looking at capital intensity ratio now close to about 45 to 50% in 2026. So we've got some enormous spend going on here. We'll see what the products look like as they trickle through 2026. But as we kind of look at the performance here, at least for today, the street likes what they see.
A $1.6 trillion startup. It's not bad, is it, Angelo? Yeah. I want to talk about Microsoft. Sometimes sentiment is just shaken, and there's a dark cloud that hangs over a stock and an ecosystem. Software names at the moment, Angelo, to Yahira's point, are struggling. What's behind it?
Yeah, I mean, and when you look at Microsoft, right, they are the king of the enterprise king of software in many respects. But whether it be ServiceNow that reported last night, and SAP, and others that are probably going to report this earnings season, and just the numbers we've seen over the last couple of weeks, there's just a dark cloud over the SaaS space. And as far as what we've seen from Microsoft posting the December quarter results, the March quarter guide, it was very solid in nature. And if there's a company that could navigate some of the uncertainties that are out there, and where the enterprise space should continue to buy their offerings, it should be on Microsoft's side of things, right? So we do think that Microsoft is well positioned to navigate some of the uncertainties, the low visibility across the SaaS space here over the next couple of years. But nonetheless, that's just the narrative that's going on right now. And there are other negatives, I think, from the print here in the December quarter, whether it be the higher OpenAI concentration risk, whether it be the lower expected cloud gross margin guide for the March quarter. I think some of that also seeping into the negative reaction you're seeing from Microsoft.
Angelo, let's dig into both of those things. This question around just the cloud computing growth and the pace that seemed to miss some of the more lofty estimates, and the dependence on OpenAI. There was one stat for the first time Microsoft disclosed that 45% of its $625 billion book of future cloud contracts was from OpenAI. How much of a concern is this to you, this concentration risk in the likes of Microsoft?
Yeah, I mean, I think it's something you've got to be mindful of. But, in the same respect, their non-OpenAI RPO is still growing at a fairly healthy clip, I think at about 28% or so in the quarter. It's going to be lumpy here over the next couple of years. I do think that 45% figure, while large in nature, likely comes down here over the next couple of years. So, yeah, I mean, on the surface, it's concerning. I don't think it's as concerning as, a Oracle type of situation. Clearly the fact that, the Microsoft, if they don't get it from OpenAI here over the next couple of years, should see it from other enterprise-related vendors. But nonetheless, yes, I mean, on the surface here, the narrative, again, is one where the street is very concerned about OpenAI at this point in time. I do think that funding round will probably help the narrative in terms of the cohort of names tied to OpenAI, like a Microsoft. So, again, we have to wait and see.
With respect to the Azure side of things and the cloud computing, how much is this an issue that Microsoft just can't meet the incredible demand as quickly as some people would have hoped? And how much is this truly competition from Alphabet or from the likes of Amazon that both report next week?
I personally think it's more the supply constraints. I mean, they did highlight the fact that, hey, listen, they could have grown their numbers north of 40% if they had the supply. So, so I do think it is more supply constrained in nature. But, in the same respects, this is a company that's going to see also much more difficult comparisons on the Azure side of things over the next couple of quarters. 2 quarters from now, you're going to have to lap numbers like 39% year-over-year growth. So I would expect the numbers to potentially even decelerate further. Let's call it into the mid-30s range as we kind of progress through the year. But nonetheless, I mean, these are still pretty phenomenal type of growth numbers from Azure. And in fact, they actually ended up beating our expectations.
Just taking a step back, what caught my eye overnight was Jensen Huang talking about how we don't have the energy. Potentially, there's going to be constraints in Taiwan when it comes to chip making into the United States and into Europe. Are these CapEx numbers so big that actually the energy demand, the physicality of building it out doesn't actually work yet?
I mean, well, we've got to see. I mean, at this point in time, energy bottlenecks are clearly a risk out there. I mean, I'd say personally, at this point in time, the street is probably more concerned about some of the memory bottlenecks. And to be honest, I mean, when you start thinking about the higher planned CapEx spend, it probably takes into account some of the higher boost in memory prices as well. But as far as the energy bottlenecks are concerned, it's going to get lumpy in nature here. There are going to be more challenges, uncertainties. I think that's going to be more of a 2022, second half of 2027 event and thereafter. But nonetheless, definitely something to be mindful of.
Just as a market analyst and a market participant, Angelo, you've witnessed markets for a long time. If we can get away from these names just for a moment, I think Lisa's doing a great job this morning of talking about the constraints in the physical world. Do you think that's the trade so far of the year, that people are just chasing that story, cross-asset?
I mean, it seems to be. I definitely think there's definitely something to be said about that. You kind of look at really where the narrative is across the tech ecosystem, right? It continues to be a pile up in a number of these chip-related type of names that would benefit from that physical AI world, as well as hardware-related names as well. So, it may not be as exposed to some of the constraints tied to memory. But nonetheless, I mean, you kind of look at the play here, at least across the tech ecosystem, and it would support that thesis here. And I don't know if it lets up here. In the near term, you'll definitely get some choppiness. But over the next 3 to 5 years, when you start thinking about the shift toward an AI world, it is going to be dictated more on the physical AI opportunities, where there's also greater uncertainties tied to this SaaS-oriented trade, and we've kind of seen this accelerated shift away from SaaS to kind of the more chip-making related names here, even over the last couple of weeks.
Stay with us. More Bloomberg surveillance coming up after this. Jeanette Lowe, Strategas, writing this: any shutdown would likely be short-lived, or short-lived, as Chairman Powell once said.
I think we need no, short-lived.
Okay, all right.
That was a short-lived issue
Thank you.
Pronunciation.
Short-lived, particularly if the Senate does not strip out the Homeland Security funding bill. Jeanette joins us now for more. Jeanette, apologies for getting off track there. Let's get back on track. Going into the weekend, is this shutdown avoidable?
Yeah, I mean, it looks right now like we're going to, again, as Tyler mentioned, have a short-term shutdown over the weekend, which would be less impactful than obviously if it was lasting much longer than that. There is this issue about the fact that they are not going to do a separate legislative vehicle. As Tyler said, it does seem like the Democrats want to use the funding bill as the vehicle for some of these changes on immigration enforcement. And so that's why we're probably going to have this shutdown. Now, obviously, this could, we could have at least a continuing resolution to cover the Homeland Security bill once the House comes back in on Monday. So this could be very short-lived. It could last only 3 days. But obviously, depending on how this plays out, this could have big implications. A shutdown would only be a partial shutdown. 6 appropriations bills were passed, but this is still about 75% of the government funding, and it includes important things depending on how this plays out. Do they pass the defense spending bill? Because we obviously are trying to threaten Iran with action right now. So that is not exactly good to have a shutdown when we're trying to have a very strong U.S. national security strategy. What happened to IRS funding? We're in the middle of tax refund season, so that could have a really big impact. And then obviously labor as well. So if that's not taken care of, we could actually miss another jobs report at the end of next week. So I do think that Congress has been on a path to avoid a shutdown. They will probably try to get these 5 bills passed immediately and get that taken care of. And then we'll be dealing with this Homeland Security bill, and it would be a partial shutdown that may last hopefully just a short amount of time, and that is our overall thinking.
Well, let's deal with the Homeland Security bill, because that's going to be where the huge debate is going to lie. What is Senator Schumer actually asking the Republicans to amend in that bill?
Yes, I mean, they want to obviously tack on some policy provisions, as Tyler mentioned, where they want to make sure that there's no use of masks, there's the use of body cameras, there's a code of conduct, things of that nature. So obviously this would have to go back to the House. There was some options. You heard some Republicans saying that they were open to this, but then you've started to hear others start to say that there have disagreements, particularly about like the mask issue and things of that nature. And so this could be a little bit of a friction point, but obviously the administration does know that something needs to be done in the wake of what's happened over the weekend with the shooting of a U.S. citizen. They do realize that they need to make some changes here, and so I think they will ultimately push to get this bill done one way or another.
Jeanette, though, if the Republicans do decide to go along with these Democrats' wants to pass that bill, are they basically acknowledging then that their strategy when it comes to DHS and ICE hasn't actually worked?
Not necessarily. I mean, I think you've heard from a lot of Republicans the way they've framed the issue, that they can say that, there's been less safety for everyone involved. There are ways that they can show that just the tactics have maybe become a little bit too strident and they need to make some changes. So I think that they can do this in a way that creates not a losing message for the Republicans.
Jeanette, is it a good strategy to hold government funding hostage to try to get some leverage? I mean, this seems like voters are not particularly pleased with that. The last time around, it didn't really work out for Democrats. There were a lot of concerns around air traffic, and we're still trying to work through the lack of data releases. I mean, is this something that's sort of running out of power in terms of the voter base?
Yeah, I mean, one of the things that obviously when we came into, let's say last Friday, there was an effort to have this bill done, have funding completely taken care of before the deadline tomorrow evening. But what happened with the shooting was obviously a stark change. It created the need to find some sort of leverage to change tactics. Otherwise, I think both parties were completely against having another shutdown. They felt the pain on both sides of that 43-day shutdown that we had last fall. But there is the concern, obviously, that if they try to do a separate legislative bill, there's worry that maybe it passes the Senate, but it never passes the House. And so there's also this fear that that ruins their own leverage on the Democratic side if they have to give up the option to try to hold the government funding hostage. Obviously, I don't think people would want a long-term shutdown. I don't think the White House, the Republicans, or the Democrats want a long-term shutdown. I think they do want to find a solution here, and hopefully this will just last a few days to get this over the finish line.
Jeanette, you mentioned something else, that the administration understands that something needs to be done. I just wonder if you expect other personnel decisions to be made from either the cabinet level or beyond to try to address some of the unrest.
I mean, it's obviously always an option. Can't necessarily say whether or not we see that happening at this time. Obviously, the one big move is to move Tom Homan into Minnesota. That was obviously a strategic decision to try to change the tactics that are being used and to do some de-escalation. We'll see if other things come out of this. Obviously, it's been just a week. We'll have to see how some of this plays out and see if there are other ramifications that happen down the line.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.